Global markets are mixed as traders analyse just how much escalation is possible in the conflict between Israel and Iran across the Middle East. There's further strength in the US jobs market, and inflation in South Korea has fallen below the central bank's target. That's coming up in our 5 Things in 5 Minutes. And in our bonus deep dive interview, ANZ Chief Economist for Southeast Asia and India, Sanjay Mathur, outlines the prospects for Asian economies across the fourth quarter.
One thing that is interesting about the US elections is that we know that Trump would be more restrictive on trade. It is quite conceivable, therefore, that ahead of the sort of elections and in Q4, we may actually see US importers rebuilding their stocks and increasing their purchases from Asia.
But first, in 5 and 5 with ANZ, global markets were mixed overnight as traders tried to work out whether and how the conflict between Iran and Israel might escalate. At 3 a.m. Sydney-Melbourne time, the S&P 500 was down 0.1%, while yields on the US Treasuries were 1 to 5 basis points higher. At various points overnight, the oil prices traded about 2% higher, although they fell back in later trade, with West Texas Intermediate up about 0.4% at 3 a.m. Sydney-Melbourne time. Here's ANZ Head of G3 Economics, Brian Martin.
So in many ways a mixed bag, and I think that reflects the fact that financial markets are thinking that unless the conflict really escalates from current levels, maybe financial markets at this stage have discounted the worst of the impact that the conflict may have on financial markets.
The US dollar index was up again this morning, 0.4% at 3 a.m. Sydney-Melbourne time. The Aussie dollar flat at 68.83 US cents, while the Kiwi was down 0.2% at 62.68 US cents. Number 2. As we talked about, the oil price did trade up about 2% overnight, although it dropped back in later trade. ANZ senior commodity strategist Daniel Hines says moves haven't been as significant in the last few days as in previous events, as traders assess that the current conflict may only have a limited effect on supply and hence prices.
I think the oil markets themselves have taken a more pragmatic approach in recent years around these geopolitical risks, and we're seeing a less of a geopolitical risk premium being applied to oil prices because the hits to supply just haven't been that significant in the past, and I think this is most likely the case in the current situation.
Number 3. Daniel says OPEC has plenty of spare capacity if supply were disrupted to any great extent.
If Israel did respond to these latest attacks and we saw Iran's oil industry impacted, then clearly there would be an impact initially, but we'd still have OPEC sitting in the background with a record amount of spare capacity just waiting to be brought online to mitigate the losses there, and I think that certainly is comforting the oil industry if things do get out of hand.
Number 4. In the United States, ADP private sector job hirings of 143,000 in September beat expectations. Brian says this bodes well for non-farm payrolls data on Friday and adds to clues pointing to a possible 25 basis point cut to rates by the Federal Reserve in November.
That was stronger than the 125,000 expected by the market and in line with the average increase for the first 9 months of this year of 150,000. The data therefore suggests that the US labour market has remained solid, which is something that the JOLTS report for the end of August also indicated. The market consensus for non-farm payroll job gains for September, which will be released on Friday, is for a rise of 150,000 in non-farm payroll jobs. So the labour market does seem to be holding in.
Number 5. Inflation in South Korea cooled more than expected in September as the annual rate fell below the Bank of Korea's 2% target for the first time since early 2021, down to 1.6%. ANZ economist Crystal Tan says headline inflation is likely to remain below the target in the near term and that expectations for a rate cut next week are strengthening.
Now that we have inflation under control and also coupled with domestic macroprudential measures aimed at lowering household debt growth coming effective from September, a high-frequency data suggesting that the housing market is starting to cool, the conditions are in place for the Bank of Korea to pivot, so we do expect them to deliver a 25 basis point cut at its meeting next week.
Crystal Tan there. Now, in our bonus deep dive interview, ANZ Chief Economist for Southeast Asia and India, Sanjay Mathur, spoke to my colleague Alex Tarrant about what's driving Asian economies through the fourth quarter, including the risks around the November US elections.
I think that the most important development we are seeing is the heterogeneity in Asian exports. So we've got literally three camps in Asia. The first is those who do not have exposure to the tech cycle. They are seeing their exports fairly stagnant. The second is what we want to call the intermediate category of semiconductor exporters. That's really Singapore, Malaysia, where you're seeing some sort of an improvement in exports that really links to the global tech cycle. And then the third part of it is those who are linked in to memory chips, logic chips, and that seems to be a structural upturn or a super cycle in demand for AI-related products. And we are at a stage where, if to be fair, I don't think any corporate CEO would like to say that they're falling behind the curve in terms of AI investment. And these are two economies in the region, Korea and Taiwan, which are seeing their tech exports perform exceptionally well at this stage. So that's really the most important development. Apart from that, we see fairly heterogeneous trends in consumption, but net-net, we are not seeing very strong private consumption. And lastly, even in investment, we do see some sort of differentiation. India is the economy where investment continues to strengthen and alongside we've seen that there's been a big jump in investment approvals in Malaysia, so we can expect significant improvement there. But beyond that, we are not seeing much of an improvement in investment. Lastly, one point I would want to make is that none of these activities or the developments we've seen are not along expected lines. They're very much as we had thought.
And then just looking at the monetary policy backdrop, obviously we've had the Fed start to ease, but also some easing already across Asian economies. What are you expecting to see across Q4 as that continues?
So we've had three central banks in the region that have cut interest rates. And going forward, it seems very plausible that the Bank of Korea and the Bank of Thailand would cut rates in the fourth quarter of the year.
And then just looking, you mentioned private consumption there. It is an issue in China that we hear. So what does it look like across the rest of the region?
Yeah, so the consumption has been fairly stable in the region. It hasn't accelerated. We did see immediately after COVID that consumption really bounced back, reflecting some sort of revenge spending. But since then, the momentum has waned. And that is a story that we think will continue because households are now quite desirous of rebuilding their savings, etc. Plus the fact that deposit rates are still quite attractive. So there is an incentive to save at this point in time. Amongst the economies where we can expect an acceleration in consumption is, once again, it sort of comes down to India, where there seems to be an improvement in rural incomes, and that sort of accounts for close to 40% of consumption. So we should see some improvement there.
And then obviously in Q4 we have the US election, which is important not only for the US, but anyone who trades with the US in particular. How much of a shadow over how these Asian economies might perform during Q4 and beyond is that US election throwing over the region?
So at this stage, there really is no clear winner that you can identify from the US election, who wins, who does not. But yes, it would be fair to say that a Trump presidency will be more problematic for Asian trade. So there is obviously a fair degree of nervousness. Now, one thing that is interesting about the US elections is that we know that Trump would be more restrictive on trade. It is quite conceivable, therefore, that ahead of the sort of elections and in Q4, we may actually see US importers rebuilding their stocks and increasing their purchases from Asia. But that would be a very temporary phenomenon.
Sanjay Mathur there. That was 5 and 5 with ANZ for Thursday, October the 3rd. Catch you tomorrow with further detail on whether the US jobs market might be strong enough for the Fed to cut only 25 basis points in November. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.